Hello investors, welcome to Simpli Stocks. Nowadays, everyone in the market is talking about semiconductors and AI stocks. But one segment that is not getting as much attention and in which a silent revolution has begun is the Kavach segment of the Indian Railways. There have been many major rail accidents in India, resulting in the loss of many lives. The Kavach system has been introduced to prevent these, and the railways will be spending up to 50,000 crore rupees on this anti-collision system in the next 5 to 6 years. Its implementation was supposed to start last year, but things got delayed. But now work on Kavach has finally started. That is why you will see that HBL Engineering announced excellent results 2 to 3 days ago. There are very few companies in the Kavach theme, and HBL is one of the main players among them. In today's detailed analysis, we will be studying the Kavach opportunity, and at the same time, we will also conduct an in-depth study of HBL engineering to see if this can be a good opportunity for us. As a standard disclaimer, this video is absolutely not a buy or sell recommendation on HBL or any other company. Here, our aim is to learn how you can also study a niche sector or a business. With that being said, let's begin. First, we will understand what Kavach actually is. So, Kavach is an indigenous anti-collision system, meaning it is a technology built in India to prevent railway accidents. Why was there a need for it? So, there have been several major rail accidents in India. The railways had been working on an automatic train protection system for a long time now, but you might remember the horrific collision of 3 trains in Odisha in 2023 and then Kanchenjunga accident the very next year in June. Since then, Kavach has come into greater focus, and there has been talks about installing it across the entire rail network at a very fast pace. Let us now understand Kavach in more detail. So the Indian Railways will be spending approximately 45 to 50,000 crore rupees on it over the next 6 years. This presents a one-time opportunity for the Kavach companies. It is a one-time opportunity because the upfront cost of installing it is very high. Later, once the entire rail network is covered by 2030 or 2032, there will be only demand for maintenance or minor replacements. For example, once railway tracks are laid, they last for years, right? India's rail network has grown to almost 70,000 route kilometer, and it will increase to 85,000 route kilometer in the next 6 years. As of today, Kavach is installed only on 2% of the network. So the opportunity for Kavach companies is very large. Kavach works on radio frequency and involves installation of radio frequency technology or RFID on tracks. Additionally, RFID readers are installed in train engines too. The cabin features all the display signals and speed limits, etc., which allow the system to automatically apply the brakes or give a warning to the pilot. This means that if there is an object ahead or during signaling issues, or if visibility is low, like the fog in India is usually heavy, so the system will apply brakes automatically. It has 5 sub-segments that monitor this train's speed. Now, from an investor's perspective, the mode for Kavach businesses is that only 3 companies have been approved as vendors for it. This means that only these 3 companies, HBL, Karnex Microsystems, and Medha Servo, will be working on Kavach. All 3 have developed Kavach in collaboration with the Railways Ministry's RDSO, and only they have the patent for it. Among these, HBL and Medha are 2 biggest players. However, Medha is not listed. Recently, an associate company of Concord received approval for trials 2 weeks ago. Now, all safety checks will take place, and only after passing them, they will be able to bid in tenders in the future. So, this is a very long process for them. Therefore, we can say that firstly, there is an entry barrier here because of technology, and secondly, it is a one-time opportunity of 4 to 5 years. Thus, it is difficult and not feasible for new players to enter here. In such a scenario, competition will remain low and margins will be high. What else makes Kavach special is that it is completely made in India, like our UPI, for example. In addition to this, it has interoperability. Interoperability means that everyone from Karnex to HBL must provide the railways with exactly the same technology so that all systems work together. It cannot be that Karnex system is different from HBL system. And you will be very surprised to know that HBL was the first company to develop an indigenous train collision avoidance system. In 2005, RDSO asked HBL to build this. Then in 2012, they did the first demonstration. 2 other companies participated at the same time. Since then, several versions have been released, and finally, version 4.0 was finalized in July 2024. And then in September, HBL was the first company to also demonstrate this new version. However, tenders for Kavach orders were delayed in 2024 and orders were announced late. But now the work on implementation of Kavach has started very aggressively. That is why you will see that in Q1, HBL sales were just 600 crore approx, which have doubled to around more than 1200 crore in this Q2. So HBL has played a pivotal role in the development of Kavach, and it is this research and development expertise that makes HBL a unique company. They target niche but high margin segments, and by developing their own technology there, their goal is to become number one or number two player in that niche segment. HBL is a 40-year-old company and they have scaled up over time by focusing on such niche sectors. Currently, the company has three business segments. They manufacture industrial batteries where they supply lead acid and nickel cadmium batteries to the power and telecom sectors. Secondly, they are also in defense. HBL has capability to manufacture batteries for aircraft, missiles, submarines, etc. They also manufacture electronic fuses for ammunition, meaning bombs, missiles, grenades, and so on. And their third business segment is electronics, where they are working on technologies like rail signaling, Kavach, and train management systems for the railways. Until last year, their batteries business was the largest segment, bringing in approximately 70 to 75% of their sales in FY25. The contribution of defense and electronics segments was only 10 to 15% each, but that has changed because of Kavach. We will look at results again in some time, but before that, to understand HBL's R&D capabilities, we will take example of their defense businesses. As I told you, HBL manufactures lithium-ion batteries for aircraft, missiles, torpedoes, tanks, and even submarines. Lithium-ion batteries are also used in EVs, but how this sector works is that most of the companies simply import cells from China, assemble them, and sell them further. There is very little value addition, and this is a very competitive market. But HBL saw the opportunity that Indian Army cannot rely on China for its defense needs. They saw that defense ministry's requirements are low. They only need a limited number of batteries every year, but safety and reliability are very important. So defense ministry will purchase batteries made in India even if they are more expensive. They are ready to pay a premium, but they will not use Chinese batteries. HBL's batteries are obviously more expensive than Chinese ones, but they identified this niche segment where their customer is comfortable buying those batteries. That's how they entered the lithium-ion battery sector. Similarly, let us take example of electronic fuses. Fuses are used in all explosives. Anything that needs to be detonated, like a grenade or artillery guns, everything needs a fuse. You must have seen such artillery guns in movies like Border or Lakshya. So fuses are used everywhere, and fuses are of two types, mechanical and electrical fuses. After World War II, many countries started shifting from mechanical fuses to electrical fuses. But we did not have technology for electrical fuses, and we continued to use mechanical fuses for a long time. Mechanical fuses work slowly and are large. They have several problems. For instance, during 26/11 attacks in Mumbai, two of our soldiers were martyred in Taj Hotel because of these mechanical fuses. The grenades used at that time had these. In one case, what happened was that our soldier threw the grenade and it either hit a wall or was thrown back by the terrorist, but that grenade did not explode on time and detonated back near our soldier. So one of our soldiers was martyred in this incident. Similarly, when another soldier pulled the pin from the grenade, it exploded prematurely and we lost another soldier. It exploded before time. After that, the government started focusing on developing electronic fuses, and HBL was roped in to develop these electronic fuses. They currently manufacture fuses for grenades and bombs, and in the future, they will be supplying fuses for other defense applications like anti-drone systems. This will become a big business for them in the future, just like Kavach is right now. So lithium-ion batteries and fuses are two very good examples of how HBL captured such subtle, low volume but high margin niche segments, conducted R&D and developed products there. And historically, what has happened in HBL's case is that one or two of their businesses from time to time bring in most of their sales and profits. Currently, Kavach is doing this and electrical fuses will do so in the future. Now, before we move ahead, a humble request. If you are liking this video so far, do give me a thumbs up. Also, you can subscribe to our channel, Simpli Stocks, where we bring multiple such videos every week. Honestly, your likes and subscribes are our only motivation so that we keep bringing such high quality research to you for free. So do like this video and yes, also subscribe to our channel. Now let us return to our discussion and look at HBL's results. You will see their sales have increased by 135% year on year, or have more than doubled, growing to more than 1200 crore rupees. The company has gained good operating leverage. There has been margin expansion too, because you will see the net profit has become 4 times in one single year. Net profit was 87 crore in September quarter last year, which has become 387 crore this quarter. So these are very good numbers for HBL. We will study these results in a little more depth now. This screenshot I have taken is from their Q2 results. Here, your attention will go to the fact that their industrial batteries business has not seen any growth in the last 1 year. Similarly, the defense and aviation battery segment has even degrown by 4 to 5 CR. However, the electronics segment, which includes their Kavach business, has shown very good growth. Sales have gone from 98 crore to almost 8 times, reaching almost 800 CR. So these are very good numbers that tell us that HBL is working on Kavach orders at a very high speed. If you look quarter on quarter as well, sales here were 180 CR in June, that is last quarter, which then grew to 794 CR. And the contribution of industrial batteries to the business was 70 to 75% last year. That entire product mix has now changed. And now electronics division has 65% share. This product mix has also led to margin expansion because Kavach is a niche high margin segment. HBL currently has an order book of approximately 4,000 crore rupees in Kavach. The railways is also releasing new tenders, and management has said that they will be executing Kavach orders in the range of 1300 to 1500 crore every year for the next 3 years. Kavach was not there in the last 2 years, but even then, HBL's average sales have been 2000 crore. So by combining 2000 crore from other segments and 1300 to 1500 crore sales that will come from Kavach execution, we can expect HBL sales to be more than 3000 to 3500 crore every year for the next 2 to 3 years. And their management has also stated this. They have said that they cannot give guidance, but broadly speaking, they are budgeting or estimating that sales will be 3000 CR or more, which translates to a good 50% year-on-year sales growth for the entire year. Moving forward, let us now do a valuation of HBL by considering a bear scenario and a bull scenario. So in the bear scenario, we will assume that HBL's performance in H1 or months of April to September will be matched by the months of October to March in terms of top line and bottom line. For example, their sales were 1800 CR and net profit was 500 CR. So the full year sales can be 1800 into 2, that is 3600 CR, and net profit can be 525 into 2, approx 1050 CR, and that would result in a 29% net profit margin. Here you can also notice how much better HBL's margin have become with the arrival of Kavach. The company is working on high margins, and just as we understood that they look for niche and high margin segments. In the bull case, we will assume that company's Q1 was low, Kavach arrived in Q2, which is why we saw such good numbers. In this case, the 2 remaining quarters, Q3 and Q4, will perform similarly to Q2. Therefore, in the bull case, we can estimate 4,200 crore in sales, and with some margin expansion and operating leverage, a net profit of 1,300 crore. So on this, HBL's forward PE comes out to just 25. So broadly, we can say that HBL can achieve sales in the range of 3,600 to 4,200 CR in FY26, and their net profit will be in the range of 1,000 to 1,300 CR, which gives it a very good valuation of 25 to 30 on a forward basis. But every good business is not only good, they all have their flaws, right? So talking about the risks here, the sales and profit growth of this company remain lumpy. Lumpy means that there will be no growth for the 2 to 3 years, but then sales and profits will increase suddenly. For example, here you will see that HBL sales remained in the range of 1000 crore for a very long time. Then the top line went from 1000 to 2000 CR. They were in the 2000 CR range for the last 2 years, and now there will be a jump again. HBL will go from 2000 crore to 3500 crore top line orbit. So this is a lumpy nature of their business. The reason for this is that the growth in the business comes when their new technologies on which they had been working are deployed. So in such a case, there will be a risk that we may not see growth in the business in FY27 and FY28. Secondly, as I told you, they manufacture many types of batteries. Among them, lead acid VRLA batteries are being phased out. telecom companies are shifting from them to lithium-ion batteries. So the second risk is technology risk, although HBL is also transitioning, but the risk remains. The third big risk is the management itself is saying that Kavach orders will start slowing down from FY28 or FY29. So when the implementation is done across the entire rail network, sales and profits from Kavach division will start to fall. In such a scenario, if the company does not find new business segments by then, we may see a degrowth in sales and profits after 3 to 4 years in the future. So this will be a risk due to which HBL might not trade at a premium valuation. However, the management has said that their business of electrical fuses for defense will kick off in the future. Apart from this, they are also working on EV trucks. In EVs too, just like in defense, they have captured a niche category of trucks, I would say identified and not captured yet, where they are building heavy trucks of 55 tons. So 55-ton trucks are these big trailer type trucks which can become a future segment for HBL. The fourth and final risk is that most of their business comes from the government. Both railways and defense come under the central government. Therefore, there is a risk of orders being allotted late, which we also saw last year with respect to Kavach. Similarly, payments from the government also get delayed. So there will be a cash flow risk. We have seen this playing out in water management companies recently, but HBL has a good cash balance, so cash flow risk will most likely be minimal. So HBL is a good unique business model that you should definitely study. There will be also a scope for PE re-rating here, as we also saw in defense and railways when those businesses in those sectors started trading at very high valuations during the bull run. I believe that we will see same thing happening in Kavach companies, especially because fundamentals here are quite strong right now. Furthermore, if you want more such unique business analysis like HBL in the future, you can join our Simpli Stocks community for that. It is a paid membership and you will find its link in the description. And finally, the research of this video took a lot of time and effort. So please do like this video. If you did not like it earlier, your likes are our motivation. And you can also subscribe to our channel Simply Stocks so that you won't miss any such videos in the future. I'll see you in the next video. Happy investing.